Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina. I'm Larry Goins. Thank you guys so much for watching. And I really appreciate it, whether you're watching or listening and whatever platform. Thank you so much. We really appreciate it. Please share. Please give us some feedback. And we really appreciate it. We try to bring the best of the rest on as guests so you guys can learn from it. It's not all about wholesaling or seller financing. It's everything under the sun, because real estate, there's so many different things you can do with real estate. So I try to bring you a lot of different people that are doing a lot of different things so you can learn from them, right? So today is an awesome day because you're going to learn from a friend of mine, Brian Hamrick. He is a mover and a shaker. He has bought and sold over 450 units. He does multifamily. He does self-storage. He does developing now. He does non-performing notes. I'm stealing his thunder. So please give a warm welcome to Brian Hamrick. What's up, buddy?
Hey, Larry. It's great to be on your show. I listened to a whole bunch of your episodes before, knowing in anticipation that I was going to be on your show. And I think you do a fantastic job. So I'm really honored to be here.
Thanks, man. I really appreciate it. Why don't you start out and tell our listeners a little bit about who is Brian Hamrick?
Well, as you said, I'm Brian Hamrick. I'm the owner of Hamrick Investment Group. I got my start in buying single-family homes. I was living in Los Angeles, buying single-family homes out of state because they just seemed so cheap.
Right.
Bought 7 of them in New Mexico, North Carolina, South Carolina. And it was a good way to get the ball rolling, but I cannot say that I really made any money. In fact, I probably lost money on the whole.
Right.
But it got my my juices going. And I realized, you know what, if I want to move up and make real money in real estate, I need economy of scale. So I switched over to multifamily and apartments. The problem was I had just moved from Los Angeles to Michigan. I live in Grand Rapids, Michigan. And this was the year 2005. And having come from Los Angeles, I knew there was a bubble. And I just waited for that bubble to burst. And once it did in 2008, I bought my first 12 unit, picked up a 4 unit, a 2 unit, a 37 unit, just kept building and building until I got to the point where I realized, okay, I've kind of run out of my money and my family's money to invest in these properties. I need to go even bigger. So I started syndicating, pulling together money from high net worth investors. And we bought a 96 unit apartment complex, a 207 unit apartment complex, a 71 unit apartment complex. And I stopped buying multifamily and apartments in 2015 because I perceived the market as getting too hot. And since then, I've switched over to, I'm still asset managing those properties, working with my investors, working with the property management company to make sure they're doing well.
Right.
But last year we picked up a self-storage facility, and I've been investing in non-performing notes. So I'm just kind of looking for other opportunities in this market where there isn't so much competition.
Man, that is great. That's a big switch going from California to Michigan, where in California the prices look like phone numbers, and in Michigan, you know, I remember at one time in Michigan, they would just about pay you to take a house.
That's true. I mean, Michigan, everyone kind of perceived, you know, when Detroit went bankrupt, everyone that kind of stunk up the whole state for a while. So,
Exactly.
you know, thank God we're past that point. But I'm in Grand Rapids, Michigan. We're on the other side of the state. It's a very different economy over here. We're always making the top 10 lists of, best places to live. First economy in the Midwest or in the Mideast, Northeast to rebound from the Great Recession. And it's just a great place to live and a great place to invest in.
That's awesome. That's really good. That's really good. So what does your business look like today?
My business today is all about, first of all, asset managing the residential multifamily and apartments that we do own. It's a great time to own real estate. It's a great time to own rental property. And I'm just making sure that we're doing the best job we possibly can with those properties. But at the same time, I have been searching for, and I found several strategic partners that are investing in other asset classes.
Right.
So, for example, I found a partner through the podcast that I host. You interview so many people. Sometimes you run across someone that you say, "Hey, I'd really like to invest with this person."
Right.
And I had a guest on my show who was investing in non-performing notes, and I called him up a month after that show, and I said, "Hey, I'd like to do some investments with you." So over the past year and a half, we've invested in 12 different non-performing notes. It's kind of a joint venture that I've been doing with him. He does all the work. He knows what he's doing. I bring the money into the equation, and we've done quite nicely. So I've been real happy with that.
That's awesome, man. That's really good, because especially when you get to that level of syndication, there's, somebody can bring the deal, somebody can put the money together, there's all different kind of ways you can participate in a deal, right?
Absolutely. And there's all kinds of ways that you can partner. And that's one of the things that I've found in this business is that you can't do it all. And you have to figure out what you're good at and what you don't want to do. And I've figured out a lot of the things I don't want to do anymore. But I have figured out what I'm good at, and that's bringing the money into the equation. And, whether that means working with high net worth investors and pooling their money together to invest in these types of assets, or just in some cases bringing my own money into the deal.
Right.
That's what I enjoy doing, and then helping. I've been investing since 2001, so I do bring some experience to the table as well.
Absolutely, almost 20 years. That's great.
Oh yeah,
that's really good. So so tell us about some of your best deals that you've done by finding strategic partners.
Well, I'll give you two examples, one from the self-storage and one from the notes. So
Sure.
Starting with the self-storage, again, through the podcast, it's a great way to meet people. Someone who had heard me on the podcast took me to lunch. We struck up a conversation and a relationship. And about a year and a half later, he brought me a self-storage deal. And he's a young guy. He had taken some of the self-storage training that's out there and just started cold calling. And the third phone call he made, he came across a couple. The perfect.
Now, that never happens, right?
It does. Yeah. It's such a perfect scenario, because it was the third phone call, literally. A couple who was ready to retire. They had owned and managed this facility for at least 20, 25 years, very well managed and taken care of. We ended up buying it off market, paid a very fair price for it, but they were using kind of the old technology, mailing out 180 invoices every month and doing it by hand and, stamps and everything.
Yeah.
We switched over to a virtual management system, got everyone online. The leasing is online. So it's as virtual as it can possibly be. And within 1 year, we have added over $700,000 in value to this property. And we paid $1.3 million for it.
That's huge, man. That's huge.
Yeah. So I'm really excited about self-storage. That's one of the areas with my strategic partner that we're going down that road. Now, like you said, it's very rare to find those off-market deals, but we try. But at the same time, we're looking at ground-up construction, because right now, if you look at what people are paying for existing product, the cost per square foot is double what it would cost to actually build it. So we're in the process. We've got some land under contract just south of Ann Arbor, Michigan, and we're going to be building some ground-up construction self-storage there.
That's really good, man. That's good. I love that deal. That's over 50% increase in value.
Yeah, in 1 year. And it's really just by switching over to virtual management,
right?
And then bringing the rents up to market. Some of the rents for these units were kept low because they were long-term tenants, and there really wasn't the previous owners, while doing a great job managing it, weren't really paying attention to the market. They were just trying to keep them occupied, and we realized going in, hey, we can bump those rents $5 a month, And then 4 or 5 months later, we're bumping them up another $5 a month.
Exactly. And times 180, that's a lot, right?
That adds up exponentially pretty quickly.
That's awesome, man. That's really good. That's really good. So, so tell us about like maybe some of the non-performing note deals.
Okay, so I've done 12 non-performing note deals with my partner, Gene. And these are just Gene and myself doing these notes. I bring in the money, we JV 50-50, joint venture 50-50. And we've had some hits and some misses. Of the 12 notes, our primary goal is to keep people in their homes. So if they're distressed mortgage holders, we try to work with them, or I should say Gene, my strategic partner, works with them. And the first question he asks them is, hey, do you want to stay in your home? And then if so, let's figure out how to do it. So of the 12, 4 or 5 of them, we've got those notes reperforming. Those are owners who want to stay in the home.
Right.
And have come to the table with paying their taxes that may have gone unpaid, paying their insurance, paying any fees or penalties that are owed, and just getting caught up and proving that, hey, every month they're willing to cut a check. Now, because we bought these notes at a discount, they may be paying, say, an 8 to 10% interest rate, but on their payments, we're receiving, because we may have paid 50% of the unpaid balance. Our return is closer to 20-25% if they're making their monthly payments. So that's a great scenario right there. Now, sometimes you work with a homeowner who either doesn't live in the home and is just kind of gone missing, or they don't want to come to the table and talk to you, and they just want to kind of ignore you and hope that you go away. In those cases, you do have to follow through with the foreclosure process. So we've picked up a couple properties, gone through the foreclosure process. In one case, and I'll give you an example of probably our greatest hit. It was a small investment, a $5,000 investment, a property in Indiana. And I looked at the Google photo online, and the roof had holes in it. It was just the worst looking house you could ever imagine. And I said to my partner, Gene, I said, well, why are we buying this? Because it looks like it needs to be torn down. And Gene says, well, we're not really buying it for the house. We're buying it for the land. Because it was on about an acre of land that was right in front of this Amish family's farm. And Gene basically said, I'm going to go to the Amish family and I'm going to offer to sell it to them for $35,000. So small deal, but within 2 months, we had sold that $5,000 note, which actually was an REO. We found out once we closed on it.
Right.
And we sold it for $35,000. My 50% profit was represented about a 247% return on that $5,000 within 2 months.
That's not bad, huh?
So I love telling that story. It sounds great. I mean, we have had some losers where we've taken possession of the property, walked in and realized that the foundation shot, just, ended up just basically giving it away and losing a little bit of money. So it's not always big wins, but when they happen, they're really nice.
That's really cool. That's really cool. So you've done self-storage. You do defaulted notes, which are the best way to buy notes if you're going to buy them, because you have the biggest bang for your buck. But it is a business. It's not just an investment. It's a business. You got to work it. You got to do what's called a workout, guys. So you've also done some multifamily. Tell us about some of that.
Yeah, so multifamily, that's been my bread and butter. I mean, I've bought and sold over 450 units. All of the properties that I still own, and there's about 370 units, they're all right here in Grand Rapids, Michigan, or Wyoming, Michigan, which is right next door to Grand Rapids. And we've got 2 large apartment complexes that we own here. And then I've got a lot of smaller multifamily, the 12 units, the 37 units, and 4 units, and so on. And it's really about cycles and picking the right location to invest in. And I'd like to say I knew that Grand Rapids was going to explode as much as it has when I started buying here in 2008. But the truth is, I just saw good prices and I saw good cash flow at that point. So I picked up whatever I could. The fact that the market has done what it has done in the past 10 years has just had a phenomenal impact on the rents that we're able to charge and the values of the properties that we picked up.
Right.
So I'm real happy with that. But I stopped buying in 2015. I think it's a cyclical type of market. And I probably stopped too soon because people are still out there making money buying multifamily. Right. But I reached a point where I could no longer purchase for the type of cash flow that I needed or the types of returns that my investors expected.
That's good. So your big role, what you do, your unique ability is raising money, right?
That is primarily what my function is. I mean, I do think I bring some vision because I think in working with the different strategic partners, and by the way, I also, when I got into multifamily and apartments and I decided to start buying apartments, I sought out a strategic partner there as well. This was a person who owned a property management company, knew how to manage the types of properties that I wanted to invest in. And I think I bring the ability to raise money and talk to investors and structure a deal in a way that investors can understand and be motivated to invest in. But I also bring some vision to the table. I have a creative background. I was in movie marketing for 20 years.
Wow.
And I think that anytime you start with a project, whether it be an investment or making a movie trailer, you have to have a vision for what that's going to be. And in investing in multifamily notes and self-storage, again, we're not just looking for whatever investment is out there. I'm bringing a vision to the table, and whatever opportunity we seize upon has to fit within that vision.
There you go. That's good. You obviously were involved in marketing Titans, huh?
Yeah, you can see that behind me. I don't know if it'll show up when you squeeze the frame, but remember the Titans. If you ever saw it, it's a great movie, one of my favorites, and I worked on the trailer for that movie. It's one of my proudest accomplishments in the movie marketing business.
That's awesome, man. I love it. I love it. You know, no matter what business you're in, you've got to be good at marketing. Whether it's real estate or making movies or whatever, you've got to be good at marketing. Marketing is the lifeblood that drives everything, right?
Absolutely. Marketing, and Larry, I know you're a master at marketing, so I'm humbled to even talk about marketing with you.
Well, thank you.
But I know that firsthand. I think to me, marketing is being able to tell a story. What is the story? If we're buying an apartment complex, what is the story? Why are we buying it? How are we going to make money off of it? How much money are we going to make off of it?
Right.
And you need to be able to tell that story very plainly and simply and in a way that your Uncle Joe can understand it. Because if you use too many words or you use too many industry words and too many ratios that people can't understand, you're going to lose them. So to me, marketing is all about simplifying things so that people can understand what it is you're talking about.
That's so true. I've always said that facts tell, stories sell.
I'm going to use that if you don't mind.
That's a good one, right?
Yeah. And I, by the way, I always back up the story with the facts. What are the numbers?
Right.
Yeah,
exactly.
You do want to use the facts, but the story is what gets people hooked in the first place.
That's true. That's true. So, how does a person go about finding a strategic partner? Because you are a strategic partner. I mean, there's people out there that I've got deal flow, because you need two things to do real estate: deal flow and money, right? And there's some people out there that have an organization, they're marketing, they're getting deals coming in, they got deal flow, but they need money. Well, you have money and you're looking for people with deal flow, right?
Absolutely. You're right. It's either, it seems like it's either or. Like you've got great deals in front of you, and you can't find the money to do them, or you've got all the money, and which is the case for a lot of people right now. There's a lot of money out there looking for good deals. So how do you find that strategic partner? I mean, it's all about networking. it's all about going to, I'm the, by the time this comes out, I'll be the past president of the Rental Property Owners Association. But I am the president of the Rental Property Owners Association here in West Michigan. Right. And that's a phenomenal networking place to go. It's not just the value you get from being a member of a rental property owners organization, but it's the value you get from the other people you meet there. And I guarantee you, in these types of groups, there are always people with money who are looking for deals. I think that going to events, you and I were just talking about mastermind groups before this event. Finding a good mastermind group to be a part of, or paying to go to someone's training, paying to go to your training, and meeting the people who are there in the audience. I would imagine there's always people there with money in your audience who are looking for the heavy hitters who have the deal flow that they can invest with.
It's funny you mentioned that, because we did an event, it's probably been 6 months now, where I had a guy from a self-directed custodian come in and talk about using your IRA. And we gave everybody a piece of paper, and we had them write on it, and then not their name, just how much they had in a retirement account, right? We collected it all up and added it up. It was something like $10 million in the room. I couldn't believe it. I couldn't believe it. So there's money everywhere, and there's anxious money, because if money's sitting on the sidelines, you're not getting anything out of it, right?
If you have it in a savings account, you're losing money when you consider the rise in the cost of living.
Exactly. That's so true. That is so true. So that's probably one of the reasons you started the podcast, was to get yourself out there and to find strategic partners and to raise money.
That's been an excellent side benefit of the podcast. Just the networking I've done, the people I've met, the great conversations I've had. I started the podcast because the RPOA wanted to have a podcast, and they reached. I was not president at the time, but they reached out to me and said, "Hey, would you be interested in hosting our podcast?" And I love podcasts. I love listening to shows like yours, listening to experts talk about what they do. And I jumped on the opportunity. So I first and foremost, I don't get paid to do the podcast. I make a little bit of money off the advertising that we have on it, which is very little. But I do it because I really enjoy it. And after being in movie marketing for 20 years, I like it as a creative outlet to be able to talk to people, have interesting conversations, and do a little bit of editing as well.
That's awesome. I love it. And guys, if you're listening or watching, it's Rental Property Owner Podcast, right? So
it's the Rental Property Owner and Real Estate Investor Podcast. But if you go to iTunes and you just search for Rental Property Owner, it'll be the first one that pops up.
Awesome. That's great. I love it. So tell us a little bit about the investors that you work with, because you do have investors that from time to time will invest in your projects and your strategic partnerships and your private placements. So tell us a little bit about that. What kind of investors are you looking for, and the qualifications?
Typically, we work with accredited investors. And accredited would mean you have a net worth over $1 million, or you, in the past 2 years, you've made over $200,000 in your job, or with your spouse, a combined $300,000 a year.
Right.
That's typically the investors that I work with. And occasionally we'll allow sophisticated investors. It really depends. I do 506B syndications, which means I can't really advertise what I've got. But I can tell you, like, I've done multifamily and apartments in the past. I've done self-storage in the past. A lot of my investors started out as family and friends. I know a lot of people don't like bringing family or friends into their investments, but my take is, why not? Why would I deprive them of the opportunity to invest in something that I think is going to make a lot of money? Right. So I started there with family and friends, and then once I got into raising larger amounts of money, whether it be 1.3 million for one of our deals, 2.2 million for another deal. All in all, I've raised over $7 million from private investors. Once I started doing that, well, you have to widen your scope. So it does help to have a podcast. People get to know me through that. I haven't really actively sought new investors in the past, just because I'm very selective about the deals I do and about the people I work with. But I try to keep it very simple. I try to be as responsive as possible to my investors. So if they send me an email with a question, I answer it ASAP.
That's awesome, man. I love that. That's great. And like you said, there's a lot of money sitting on the sidelines right now.
Yes, there's a lot of money sitting on the sidelines. I wish one of my goals is to have more deals where we can funnel some of that money in.
That's great. I love it. Now, typically, you're not talking about you've got hundreds of investors in each project. You may have, and I don't know, I'm guessing 5 to 20 investors in any given project, I'm guessing.
Yeah, I mean, the smallest amount I have in one of my syndications is 3 investors. Not including myself, so I guess 4.
Right.
And then the largest amount I have is 24 investors in my other deals.
Right. That makes sense. And I'm assuming you probably typically have somewhere around a $50,000 or $100,000 minimum.
$50,000 minimum currently.
Yeah. Okay. That's good. That is good.
Yeah, I found that 50,000 is a good number. Because a lot of my existing investors, that's what they're comfortable with. So I would not want to price them out of any of my opportunities. And then investors who only have 25,000, they tend to take a little bit more of my time. So I feel like 50,000 is a good place to start.
Good. That sounds great. So Brian, this has been really, really good stuff. Really good information. How would somebody learn more about you, about your organization, reach out to you if they have any questions, want to follow you, want to start listening to the podcast?
Yeah, thanks. The podcast is the Rental Property Owner and Real Estate Investor Podcast. And, it's very much like yours. I talk to experts in all different aspects of investing. There's no one niche of real estate that we focus on. It's all different aspects. Larry, you've been a guest on there already. You and I recorded a conversation that'll come out in May. And both times it was a great conversation. If you want to find out more about me, you can go to my website, which is higinvestor.com. And HIG is Hamrick Investment Group. I'll spell that for you. It's HIG Investor, INVESTOR.com. You can email me at Brian@HIGinvestor, Brian, BRIAN @HIGinvestor. And I make myself as available to people who want to reach out to me as possible. So feel free to drop me a line.
That's great, man. And you really are accessible. And I'm on your website right now, higinvestor.com. It's got a wealth of information, a lot of good stuff, linked right to the podcast and stuff right there. So it's really good stuff, man. I really, really appreciate you being on. This has been awesome.
Yeah, always great talking with you, Larry. It's a lot of fun to be on your show. So thank you for inviting me.
Thanks, man. I appreciate that. What kind of parting words would you give to an investor if they've got some money sitting on the sidelines, they're not really sure what to do, they don't really know where to go? What are some words of wisdom that they should probably look into, or some due diligence or whatever they should do before just saying, yeah, I'm going to give this guy my money, or I'm going to invest with this person?
I'm glad you asked me that, because before coming on the show, I was thinking, okay, what parting wisdom do I want to give? And I think that even though you and I both, I think, have excellent podcasts, because we talk to experts and we have great conversations. Part of the problem with our podcast is it's free, and it can, for a first-time investor, and I'm talking to people out there who haven't quite, they're interested, they know they want to invest in real estate, but they haven't quite pulled the trigger. They're hearing all types of different opportunities that they can go down, different roads that they can go down.
Right.
And it can be confusing, and it can be paralyzing. So my advice for today is to treat your quest as a business and start investing in that business. You can listen to our podcast for free, and we give out lots of great content, but start by buying a couple books in an area that you think is interesting. read those books. If you like what you read, find the guru out there or the trainer or the coach who's teaching that material, and then pay to take their boot camp, pay to take their coaching. Because I think that by actually putting out some money and investing more than you're comfortable with, and I don't sell any training. I'm not here to sell anything. But I do see that the people who pay for the training and actually take it seriously and do their best with it are the ones who end up being the most successful. So don't think you can do it on your own. Don't think you can just teach yourself by listening to free podcasts. Pay to read a book, pay to buy a book off of Amazon, pay to go to some of that training and start going down that road of learning from real people who are doing it for real.
Man, I'm so glad to hear you say that, because I've had so many people over the years, well, you could just get enough information online for free. You don't need a coach or a mentor or a home study course or whatever. Look at my library, right? And that's just 2 of my 4 bookcases, right? And I still spend about $30,000 a year on my own education. And I've been doing this over 30 years. So I'm really glad that you said that. I sell education and coaching and mentoring, but I'm also a student as well. And it's like Jim Rohn said, I heard Jim Rohn say this years ago, don't be a follower, be a student. Learn a little bit from this one, a little bit from this one, a little bit from this one, and come to your own conclusion. So thank you so much for sharing that. That was really good.
Yeah, and I know you've come to our RPOA annual conference.
Oh, yeah.
You've been a featured speaker there. I know your training is top notch. We've had plenty of other speakers in other areas and niches in real estate investing who have top notch training. I've certainly spent a lot of money too, maybe not as much as you have, but I have found value in every dime that I have spent in learning this industry.
Yeah, if you get one idea that helps you close one more deal for your whole career, it was well worth it. And I have been to RPOA multiple times as a speaker, but when I go to those events, when I'm not speaking, I'm sitting in the room, and a lot of times I'm the first one at the back table with my credit card out. So I know the value of education. Absolutely.
Yeah. Even though we're out there doing it and making money, we're both still investing in the training. Absolutely.
Exactly. Well, man, I really appreciate it. This has been awesome. Thank you so much for being on. Guys, thank you so much for watching. Please share. Please give us some feedback. Please give us some comments. We really appreciate that. If I can help you, go to LarryGoins.com. Be sure and check out higinvestor.com. Make sure you get on Brian's podcast and check him out and listen to it every week. He's got a new one coming out, new guest speaker every week. So with that, thank you guys so much. I really appreciate it. Thanks, Brian.
Thank you, Larry. It's been a pleasure.
Awesome. Thanks a lot. Take care, everybody.